All right. Well, the dollar index coming off its worst year since 2017 as U.S. deficit concerns, shifting trade policies, and the Fed's rate path all weighed on the greenback. Our next guest sees more downside ahead, calling the dollar, quote, deeply overvalued. Joining us now is Ntonifor. He is chief strategist at BCA Research, leading the FX and fixed income strategy. Tony, it's great, or Chester, excuse me, it's great to have you on. And that's where I want to start with you, because we did have this weakening of the dollar last year pretty significantly against other major currencies. You still think it's overvalued. Why?
We've done a lot of models that show that the dollar is overvalued. If you look at it from a purchasing power parity basis, you're getting around, like, call it like, 15 to 20% overvaluation. Typically over time, our work shows that when you have this level of overvaluation over the next, call it 2 to 3 years, the dollar tends to depreciate. If you also look at what's happening, in terms of competitiveness, you see that, according to competitiveness measures, the dollar tends to be less competitive compared to a lot of other currencies, and you can see that in some of the data, which I can present a little bit later. So yes, a little bit still overvalued. You have gotten that depreciation that has adjusted that overvaluation, but I think that going into 2026, 2027, you're going to get a little bit more adjustment.
Yeah, it's interesting here. You say in your notes that the dollar is no longer reliably defensive. Why not? And how does that contribute to this conversation overall?
Well, correlations change over time. So it's no longer reliable as a defensive currency because the dollar has obviously not provided that defensiveness that you needed during the market sell-off that we got earlier in 2025. So that has raised a lot of concerns. I think maybe that is a little bit overstated in the sense that it is still the global reserve currency. It's still the global safe haven. So in terms of stress, you're still going to get inflows into the US dollar. But the fact that you did not get that protection when you needed it in terms of the downturns that tended to happen earlier during 2025, that has raised concerns about its defensive nature.
Yeah, I mean, we've talked so much about volatility in the stock markets here at CNBC, but we've seen a lot of volatility over the past year or so in FX as well, whether it's been some of the moves we've seen around the yen or even euro yen. Even just today, Peter Boockvar pointing out the fact that you're seeing the Chinese yuan at its strongest level against the U.S. dollar since 2023, which arguably is signaling more about the shift in policy in China than the currency itself. How to think about this volatility and how to think about some of these moves specifically?
Yeah, that's a very interesting question, and it's a very it's interesting to dissect that. So, talking about volatility, I would say that if you are trying to position yourself against rising volatility in the coming regime shift that you're talking about, you definitely want to hold some dollars, but you want to put into perspective the fact that the regime might be changing. In terms of the Chinese yuan and the appreciation against the dollar from a lot of emerging market currencies, the answer is actually simple. It's come down to fundamentals. A lot of these currencies, not the yuan. The yuan is facing China is facing deflation, so obviously that is a major impact on what's happening in terms of the long-term fair value of the yuan against the US dollar. But you get you get a good carry on a lot of currencies that are not in the US, in emerging markets. Mexico, for example, Poland, I was just looking at today, a lot of South American currencies, Asian currencies that we're talking about. So when you're looking at this, sometimes it talks about we tend to shift the narrative to a regime shift, but fundamentals are playing a role here. You're getting a lot of attractive carry in other currencies right now versus the US dollar.